cat's out of the bag. The central bank has just said that they need to cut, or we need to cut, the wages of all workers throughout the country in order to make exports cheaper so that our economy can do well. So basically they're saying that ordinary workers have to suffer wage cuts so that profitable export-driven businesses can make more money. Now, what nobody seems to be talking about is the fact that if we had our own currency, none of this would be in any way necessary. That it's because we gave up our own currency that the workers are going to suffer. Now you might say, well sure, if everybody's wages goes down and therefore prices go down, does it really matter? Well, of course it matters, because your debts aren't going to go down. The amount of money you owe the bank that they're charging you interest on isn't going to go down. It's actually going to go up in relation to your income. If we had our own currency, what would have happened is the government would have issued more currency, as has been done in the past. Interest rates would come down, or stay down. Well, they're down at the moment, but interest rates wouldn't be going up. And because of the more money in the economy, obviously our currency would be worth less. So in terms of imports, our wages would go down, but not in relation to debts that we all have hanging over us, whether it's your mortgage payments, car payments, credit union loans, or whatever. So, because we gave up our own currency, ordinary workers are going to be losing money. If you're a public sector worker, you're already losing loads of money. If you're on any kind of social welfare, you're already losing loads of money. If you're working for one of the companies that has reduced wages, you're already losing loads of money. And now they're saying that anybody in a semi-state job and other jobs, and perhaps even they're going to come back to the public sector workers again, that you have to have your wages cut, but you're not going to have your mortgage cut. Your mortgage is going to go up. They're going to bring up interest rates. Or they're going to bring up interest rates to pay for the errors they made in the past. And you're going to have to pay for it. So you're going to have to pay more money on your mortgage and have less money coming in. So, the elephant in the room, our own currency. We need our own currency. 1993, to the introduction of the euro, was the only time in Ireland that we had a strong export-driven productive economy.